Good morning, trading world. It is April 8th, 2021, 8:35 a.m. on the East Coast, and this is my pre-market outlook. And I'm coming out right as important economic data is hitting, and I'll come back to that because it's going to kind of change the skew of the analysis that I wrote just before this. Today's theme: snapback after 410 or before 410. That is the question. If you recall, earlier this week, Monday, I came into the week saying that there's going to be some great opportunities later on in the week. Those great opportunity I was talking about will come in the form of a contrarian type trade. And that contrarian type trade, it's called a snapback. And basically, what a snapback trade is basically when market just kind of gets unhinged or too far away from its moving average, and we get that rubber band snapback effect. It's no big deal. It's not a correction. It's just the snapback that kind of get prices back to reality. And I said earlier on this week that it would be a great setup later on in the week for that. And that is just the setup we have. Now, whether it happens before 410 or after 410, after we reach the 410 area on the SPY, that's going to be the question. And it looks like this bad jobless claims data that just comes out, it may make up its mind and we may get that snapback before 410 because of the bad data that is coming across the tape right now. Let me show you a little bit about the snapback before I get into the outcomes. Alright, I just switched the chart to another setup, to a 1 year daily setup, and let's get into the chart here and show you what I mean by snapback. Alright, on the 1 year daily we have a moving average, just a simple moving average here. And as you see, we kind of meander back and forth across the moving average. Well, this time we got a good ways above that moving average up here. And what usually happens when we get too far above it, we get a snapback to go back toward that moving average. So that's all it is. And what we're looking for is an overbought condition and diverging conditions on volume and internals to help feed us in that snapback. And we have also, to help us with this snapback, we have a slight air pocket right here where there's low volume nodes where it's easy for us to slice through. So those are the conditions that kind of help this snapback happen. All right, and before we go back and I get into the outcomes of the day, I thought it would be helpful to kind of see the charts in a different view as well. This is my 90-day 4-hour chart, and right here I just wanted to point out that for all of this week we've basically traded in a very small box. And if you can see where this box is right here, we've traded in pretty much a small box. And the reason for that is, if you notice, this is kind of right back and forth on the edge of the expected move. And that is also what's kind of drawing us and is going to help in that snapback, because we're outside of that expected move, which if we get too far, the dynamic hedging, we start to break away in that the big hedge funds with their dynamic hedging, they start to have to buy more to compensate, which feeds into that explosive move away. So we've kind of stayed right here on the edge where there hasn't been a whole lot of that type of movement. So it's getting pretty safe to say that we kind of get that pull back in, since that dynamic hedging hasn't had to do much. We're still skirting this line of this expected move pretty well. I just wanted to point that out. So if we get back to the lower side of this box, the more we are to the more we get back into this box, the less of a chance we get going to 410. And because of the jobs number that just came out, it looks like it's going to push us back inside the box, which kind of limits our ability or closes the door to getting to 410. Because at I believe it's 406, there's enough flow with that 406 to kind of keep us stuck there for a while. And if we're stuck there for most of the day, it's going to be very hard to get out of that and go back toward 410. So if we can't break above this 408, it pretty much closes the door to 410. All right, let's get back to the outcomes of the day. All right, here we have outcome number one. I started off around 7 o'clock this morning, and I had given this a probability of about 45%. And now that I've seen the jobs data that has come out, I do want to change this and put this at 35%, giving outcome number two a better probability of happening. But I have it wrote up, but I just want to make that note verbally for those of you watching the video. I could swap outcome number one and number two's probabilities right now. In outcome number one, we hold support at this 407 area. We break through 408. Any retest back into this back inside the 408 area is a great time to get long and ride it to the target of 410, 411 area. And then we must be very careful of an end of the day kind of fall or shakeout, because that is very well possible at these levels. So again, outcome number one, we hold this 407 area, we hold it. That would be the best time to get into your long calls. Once you see that we're gaining strength and not diverging into weakness at this 407 area. And then we get the break above 408, 408.61, or mainly this 408.8 area, which was the previous high. That would give us, so open the door for us to go to this 410, 411 area. That is outcome number one. Here we have outcome number two. Again, because of the economic jobless claims data, I would love to kind of switch and put the priority or the biggest probability outcome at number two. Outcome number two is we have a support area in this 407, 406 area. We break through that and close below or in that 406 area. We get a retest back up toward that 407 area, but it will fail in that 407 area. This is where you should look for the divergence, the weakness in the internals. And this would be a great place to short. And from there, we're going to get this almost violent snapback towards the mean. So that is our outcome number two. It has a 35% probability of happening, but as of now, after I have seen the economic data, I would place a higher probability on this scenario for today. Now, here we have outcome number three. Outcome number three is basically consolidation for most of the day between this 408 and 405 area. This has the least probability of happening because we got a good bit of that yesterday in the wait or anticipation of the FOMC minutes being released. And a good reason that this could take place a good portion of today is because we have the Fed chairman, Jerome Powell. He will be speaking today at 12. So we could get another consolidation range for a good portion of the day while waiting for Jerome Powell to speak. So that is outcome number three, which I have at a 20% probability. So those are the outcomes for today. As always, know your risk. Wishing you a profitable trading day. Have a great one.